Every Monday to Friday, this is Peter Lewis's Money Talk.
Money Talk.
Good morning, this is Peter Lewis, welcoming you to Money Talk on Wednesday the 17th of June. An update of the day's business and finance news from across the Asia-Pacific region is coming up. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 90 million customers across 10 countries. In today's business and finance headlines, Donald Trump said Tuesday that ships were again moving through the Strait of Hormuz and the vital oil routes will be completely open by Friday after Washington and Tehran announced a deal to end the Middle East war. The United States, Iran and mediator Pakistan said the agreement was to be signed Friday in Switzerland. A senior US administration official, however, said Trump, Vice President J.D. Vance and Iran's parliamentary speaker had already signed the text electronically. The Bank of Japan Tuesday increased its main interest rates to a new 31-year high after a surge in global energy prices. The BOJ raised its policy rates to 1% from 0.75%, a level not seen since 1995. Japan's interest rates were cut aggressively in the 1990s to combat the fallout from a collapse in prices of assets like property and shares. They had been near zero for 2 decades as prices fell and growth stagnated. Retail sales in China fell 0.6% last month from a year ago, the first drop since the country reopened from COVID lockdowns in late 2022. Notably, car purchases plunged 16%. The decline in home prices deepened, while fixed asset investment shrank by a more than expected 4.1% in the first 5 months of the year. On the bright side, industrial production climbed 4.5%, up from 4.1% in April, aided by an export boom driven by AI-related demand for hardware. The property sector also continued to struggle in May. New home prices, for which China releases limited data spanning 70 major cities, fell 0.2% on average over the previous month. Property investment is down 16.2% in the first 5 months, compared with the same period a year earlier, worsening from 13.7% over the first 4 months of 2026. On today's programme, I'm joined by Richard Harris, Chief Executive Officer at Port Shelter Investment Management, and Tony Nash, the founder of Complete Intelligence. And with a view from Japan is Tokyo-based journalist and author William Pesek. And if you want to get in touch, please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
On Wall Street Tuesday, US stocks were mixed. The Dow rose to a record high as investors rotated out of chip makers and into cyclical stocks amid declining oil prices. The 30-stock index advanced 329 points, or 0.6%, for a record close of almost 52,000. It was just 0.33 of a point away from closing above 52,000 for the first time ever. The S&P 500 fell 0.6% and ended the day at 7,511. The Nasdaq Composite pulled back 1.2% to 26,376. SpaceX rallied another 4.8% Monday. The stock has jumped almost 50% in just 3 trading sessions since its IPO, pushing the company's valuation to $2.64 trillion and overtaking Amazon as the world's 5th largest company. The skyrocketing share price briefly pushed SpaceX's market cap past Microsoft's valuation. US Treasury yields fell on Tuesday as investors looked ahead to the Federal Reserve's 2-day policy meeting. The yield on the 10-year Treasury note fell 3 basis points to 4.44%. The 2-year Treasury note yield was 1 basis point lower at 4.05%. In the currency markets, the dollar was slightly weaker as investors started questioning the risk of a peace deal not going through. The yen was last seen trading at 106.37 yen per dollar, unchanged on the day. The offshore Chinese yuan was also unchanged, around 6.76 renminbi per dollar, remaining near a more than 3-year high. Spot gold settled 0.4% higher at $4,331 per ounce, and oil prices fell to their lowest level in 3 months Tuesday. Brent crude oil dropped 5.1% to trade below $80 a barrel for the first time since March, settling at $78.96 a barrel. Bitcoin was 1% lower at $65,800. Asian equities finished yesterday on a positive note. Japan's Nikkei 225 rose 0.1% to 69,405 and hit an all-time high. South Korea's Kospi jumped 2.1% to 8,727. In Taiwan, the TAIEX closed 0.9% higher at 45,809, just below a new all-time high. Hong Kong's Hang Seng Index was the worst performer among major Asian indices yesterday, dropping 349 points, or 1.4%, to 24,494. And mainland China's CSI 300 fell 0.2% to 4,884. Futures markets painting a mixed picture at the open this morning. In Hong Kong, the Hang Seng projected to rise 0.6%. Looks like the Nikkei 225 in Japan is going to lose about 0.6% at the open.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Much to discuss this morning, so let's crack on and welcome our guests. We have, first of all, Richard Harris, who is Chief Executive Officer at Port Shelter Investment Management over in the United States at the moment. Morning, Richard.
I am, and very pleased to be here.
And always permanently in the United States, well, almost permanently, Tony Nash, the founder of Complete Intelligence. Morning to you, Tony.
Thanks, Peter. Great to see you.
So let's start with what we know about the famous deal. Donald Trump said Tuesday that ships were moving again through the Strait of Hormuz and the vital oil route will be completely open by Friday. This is after Washington and Tehran announced a deal to end the Middle East war. The deal is due to be signed Friday in Switzerland, although apparently has already been signed electronically by Donald Trump, J.D. Vance and Iran's parliamentary speaker. Richard, let's ask you for your thoughts on this. We don't know an awful lot about the details, do we? Because they haven't been published yet. But what are your feelings? Do you think now that finally this war is coming to an end?
Well, I think this stage of the war is certainly coming to an end. I mean, we don't know really what's going to happen in the future, but I think both sides have pretty well come to a stalemate where, they're reasonably happy with the ceasefire, I think, both sides. And I think the Iranian side would probably feel, that they've pushed their luck far enough and quite happy to leave it there where it is. Details are extremely sketchy. I mean, there was a report this morning that J.D. Vance said that yes, there is a plan, there is a document. It's 1.5 pages long, which seems to imply it's really, really at the high level. I think a lot of it is going to be solved on the hoof. So it looks as if Donald Trump is putting quite a lot of pressure on Benjamin Netanyahu to slow things down in Lebanon, certainly. And I think the Iranians will be fairly happy with that. And as I think in terms of the Strait of Hormuz, I think the Iranians have basically felt they pushed their luck far enough, and we'll see how that goes. But, they really are able to tweak these things very quickly. And perhaps they'll say, well, it's not toll free, or we're going to charge a small toll, or we're going to close it again, or whatever. I think not. I think there'll be sort of a rather uneasy stalemate. Where everybody is going to be fairly happy with actually how things have turned out.
Okay. Well, Tony, tell me a little bit about what you think Americans care about and don't care about in all of this back and forth. I mean, I get the feeling that they don't care too much about the details of what's in and what isn't in the deal. They don't care like Trump does whether this is a better deal than what Obama got several years ago. What they care about is what they're paying for the price of petrol at the pump and their groceries.
I'll be honest, I think that's the biggest cohort is what people care about, what they pay for groceries and for gasoline. But you have two other cohorts. One cohort who hates Trump no matter what. And then you have another cohort that feels like Trump is abandoning Israel. And so you really, in general, I think you have three segments in the US. And, I sit back and it's kind of funny to watch people argue about the details of this plan. I love watching people get emotional about it because the details are so sketchy. we really have no idea what's being agreed. And, I think it's, they're agreeing to have an agreement is effectively what they're doing, right? And we're celebrating it with $75 oil, which is great, right? I mean, we've come from $100 to so 25% off of crude oil for agreeing to have an agreement. That's a win, I think, so far. And watching people kind of argue on social media about whatever about this agreement it's kind of I like being a spectator at the moment, but I think in a month, probably when we know the details, I think a lot of the emotion will be out of it and people will be kind of over it and ready to move on.
Oh, Richard.
Yeah, I think that's exactly right. I think if you go back to Rothschild's quote in 1812, buy on the sound of cannon fire, sell on the sound of trumpets. I think, yes, we are seeing markets move at the moment. We have seen oil move, but it's at 75, not at the 60s it was before. And I think we'll probably see that markets revert to AI, inflation, interest rates, the kind of trending issues that are long term.
Is it the case, though, that investors, that the main thing they're worried about here is when are the tankers and the ships going to start moving again, and when are we going to start getting, oil delivered again, and all the other things that pass through this choke point in the Strait of Hormuz? Is that the number one issue for investors?
I don't think so. I think that, as I was saying a moment ago, that investors, and Tony was saying just a moment ago, that investors will probably say, let's move on. Okay, we've done this. A lot of the reactions are already in the market. So I think that's really what investors are going to focus on. Yes, there may be choke points in terms of aviation fuel that may stay high. Other refined products prices may well stay high. But I think in general terms in the market, it's just going to say, job done, let's move on.
Tony,
I think... Go ahead. Sorry, Peter.
Yeah, I was going to say, is that the right response, though, for the markets?
Yes and no. I think part of the thing, at least here in America, I don't know what it's like in Asia and Europe at the moment, but I think most Americans are tired of the purity tests of the last 20 or 30 years in politics. I mean, that's still what gets cable news and, social media and stuff. But most Americans, honestly, they're tired of the purity tests. And are you a true believer in Trump or whatever? I mean, I think a lot of these conversations, come around to that stuff, and people are just tired. They just want, 2019 prices again. They just want, a burger for $5. They just want the basics. And it's been really surreal for me to see a lot of Republicans turn into John Bolton overnight in the US, just crazed lunatic right fringe. I mean, I'm a lifelong Republican, but John Bolton is next level, right? And so, you have a lot of people turning into this crazed lunatic fringe over Iran when, Trump was just trying to prove a point about nuclear weapons. That's really, I don't think there's anything ideological about it. I think it's completely regionally tactical, helping his friends on the other side of the strait and defanging Iran. I think it was really that simple. And I think that he's convinced that things were done when they bombed, I can't remember the names of the facilities, but when they bombed the facilities, and everything else is just an ideological argument. And I really don't think he cares that much. So, it's Americans are tired of being torn apart. They're tired of being polarized. They're tired of being kind of torn apart by these John Bolton types who want to invade, every country. And I think we're going to start to see, and I know this sounds silly, but I think we're going to start to see a bit of a return to the center because people are just tired.
Well, yeah, but isn't this the same, with most countries? What people want is for the kids to have more opportunities than they did, for them to have good education, for there to be good roads, for there to be a health service they can count on. That's what people look to their leaders for. They don't necessarily look to them to make grandiose moves in foreign countries. And yes, that may well be important too. But get the roads fixed first, get health fixed first, get the environment fixed if necessary. That's really, I think, the heart of what democratic leadership is about. And actually where some of the, should we say, the less ordinarily democratic countries are showing that they can do at the moment. They can do these things, put infrastructure in. But that's what people actually want. Leave us alone. Let us get on with life.
It's very libertarian, Dr. Harris.
Well, I hate to call myself a liberal in America. I'm quite happy to do it in Europe, but not in America.
Isn't it going to take a long time, though, for things to get back to normal? There are many things that have been damaged in the global economy that are not going to be fixed quickly. There's loads of ships that have got to be moved out of the straits. Many CEOs of shipping companies are saying they're not going to move ships back into that area for many weeks or months till they see how this settles down and how it all pans out. So even though markets are pretty euphoric, oil prices are tumbling, it may take a while, might it, to see the benefits of this come through.
I think a lot of that is about expectations. People now have these expectations that crude is going to be around $100. So 75 feels like you're on holiday or something like that. And so when you have these delays for distribution, I think, to get oil back to say $90 or something, it's going to feel like a penalty after this. So I think whether governments and central banks play in futures market to suppress the price, or people rotations, or however the logistics work, I think they're going to work very hard to keep those prices down. So the physical logistics, I think most consumers think that's someone else's problem. That's why they make their money. So I don't think it's thing that most consumers are worried about. I don't think it's something that the Trump administration is worried about, because they've been able to suppress oil prices to be kind of 100 when if this was done 20 years, we would have had $150 oil at least.
I'm a great believer in
the
No. I'm a great believer in the adaptability of markets. We do worry sometimes, are they going to get the tankers out or not? But there's now going to be enough relaxation that the assumptions we had before are going to be better. And because markets are adaptable, because there are so many degrees of freedom involved. We're talking about tankers here, but now there's going to be more freedom. Stocks will be released more. People will be happy about lowering prices. All of these things happen. So that's why I think we're probably in a situation where they're going to say, yes, there's going to be difficulty with tankers and loadings and this sort of thing, but it'll be sorted out in the market. We may see prices 5%, 8% higher, but, the market can adapt to that and adjust to it. So that's why I'm feeling relatively sanguine about things going forward. And I think that what markets are going to be focusing on are the good old stories of AI, raising money, liquidity, debt, all the stuff we normally talk about.
Well, let's talk about some of them because there's more things going on this morning. Central banks in action. First of all, the Bank of Japan increased its main interest rate to a new 31-year high. The BOJ raised its policy rate to 1% from 0.75%. That's a level last seen back in 1995. Richard, do you think the markets have got particularly the currency markets, where there's a lot of focus on the yen, did they hear what they wanted to hear from the BOJ yesterday?
I think slightly surprising, maybe that the BOJ's acted, but let's face it, we're talking very small amounts, just almost mid-course corrections as much as anything here. So I think that's maybe in line. There's clearly a bias among central banks around the world for interest rates to rise, not fall. That bias doesn't mean to say that interest rates will rise, but I think that we're looking at rises more likely than falls. But, it's always difficult to predict these things further out because let's say we have a slowdown in growth, and we saw a slowdown in Chinese consumer statistics yesterday. If you suddenly see a slowdown in the markets, then interest rates, of course, they'll fall. But I think at the moment there is a bias for rates to go up, which probably means rates are going to stay stable for a while with most of these central banks.
Tony, the Bank of Japan's still behind the curve, though, isn't it? It needs rates higher than 1%. It's just getting there at a very glacial pace, surely.
Yeah, they're definitely taking their time, very much in BOJ style, right? So I kind of sarcastically was saying to people, the BOJ did something. Like I saw a bunch of stuff about the BOJ in my feed last night, and instead of just talking, they actually did something. And instead of easing, they actually tightened. So those are not words that we're accustomed to saying. So they're definitely signaling that they're taking a different direction, which is good. It's good for them to kind of strengthen after years of weakness. So, and it also tells me that we have economic competition heating up in Northeast Asia, which is great, you know. So I'm happy to see that, and I'm happy to see the BOJ taking action. I think Ueda was out or sick recently as well, so I was a little worried that they weren't going to do something, but I'm glad they did.
Okay, and what about the Fed? The Fed is meeting. We'll get the decision at around about 2 a.m. Hong Kong time on Thursday morning. It's Kevin Walsh's first meeting as the new chairman of the Fed. I don't think there's any doubt about the decision on rates. They're going to be left on hold, aren't they? But what else should we expect from Kevin Walsh's first meeting, Richard?
Well, I think probably they're still going to be looking at data. You remember, under the Powell regime, it was very much data, data, data. Walsh, I think, is more inclined to say, well, let's be proactive about the decisions we take. And that probably fits in with his obvious Trump influence. Clearly, he's going to be looking to lower rates as soon as he can. But in this environment, I don't think he can. Because many of the other Fed governors will be against reducing rates. That's just not going to happen. And you're quite right. I think rates are pretty well going to stay stable for a while. But I rather suspect there'll be quite a lot of talk about data, what the data has been showing, certainly for the next couple of meetings before Walsh maybe tries to say, well, maybe we should do something in advance. And that's a good idea, to sort of think about what to do in advance. The danger is that we'll end up with the Fed getting whiplashed with every new piece of data coming out. So it's early days yet to see what's going to happen. But yeah, for the next meeting or two, we're on hold.
Tony, a lot of people looking very carefully to see what he says, and in particular how political, how joined at the hip he is with Donald Trump. So I presume his words at the press conference are going to be very important. It's also going to be interesting to see whether or not he provides a dot plot. He's said before he doesn't really like them, does he? So it'll be interesting to see, I presume, if he participates in that as well.
Yeah, he was very clear in his Senate testimony that he's going to look at different data, and he's very focused on where the inflation comes from. So I think a lot of central bankers think that they're really super intelligent when they can say the words inflation and deflation, but there are subtleties to that, and the origins of that deflation and inflation matter. And so Warsh has talked about that. And so my bet, he's going to be lean dovish. I don't think he's going to lean into it hard, but I think he's going to lean dovish. I think there's going to be a clear dovish sentiment coming out of Thursday. I wouldn't be surprised if he voted for a cut, and if there were more votes for a cut, but I don't think they'll cut yet. But I am sure we'll see one, if not two cuts before the midterms. Whether that's a mistake or not, some people will say it's a mistake. Again, I think when you have supply-induced inflation, it's very different. I don't think it's necessarily a non-monetary policy issue. We can argue about that for a long time in a lot of papers, Richard, but I think it's a different source, and I think he's going to lean that way. I think he's going to focus on rates on the short end. I think he's going to let the Treasury focus on rates on the long end. And he wants a clean remit for the Fed. So I think he'll clean up a lot of the kind of dual and triple and quadruple mandates that the Fed tried to cultivate over the last 10 years.
Yeah, I can't see the Fed really doing much from, say, September onwards, because they're just going to be criticized for influencing the election either way. There are still far more Fed governors who will oppose Walsh in terms of reducing rates, and any reduction of rates is obviously going to be seen to be a political view. I don't think the Fed wants to be in that game at all, at least most of the governors there. So I guess they'll probably do nothing from the end of the summer.
I mean, Tony, your view is out of sync with the markets. I mean, the markets were actually
That's fine.
pricing in a rate hike by the end of the year. They've sort of moved away from that, but certainly by about March 2027, they're still pricing in a rate hike. So how would he justify that? What if he's going to be looking at where the inflation comes from? How is he going to justify a rate cut?
Great question. I think we have crude prices that are down 25% in the last 3 trading sessions. We have pretty good rains here in the US, and so the ag crop is looking pretty good. There are some exceptions, but ags are looking pretty good. And so I think when you look at kind of the primary indicators of inflation, I'm not talking about manufactured goods necessarily, but I think we're looking at inflation, I believe, falling pretty dramatically as we go into the second half of the year. So the real question is, what will happen with services jobs, services inflation? So will inflation fall so hard that services employees don't ask as aggressively for pay rises? And if that happens, of course, they'll still ask. Everyone always wants a pay rise, right? But will inflation fall so much that people start or stop asking for aggressive pay rises? That's the real question. And I think that's really what remains to be seen.
I actually, being a traveler in the US, it's quite interesting. I'm finding the US quite expensive. And I didn't last time. Yes, the currency has gone up, maybe 10, 15% or so. But that doesn't account for the kind of prices that I'm paying, which are quite expensive. And just in general terms, I don't know whether salaries are keeping up with that, but they do, anecdotal evidence, they do seem quite expensive. And I think no matter how much Walsh may argue this is demand push inflation, this is supply inflation, this is imported, this is this, this is that, the guy in the street or the lady in the street is only interested in how much more am I having to pay out of my pay packet each month. And I'm not convinced that they're going to really have a big change of heart before the midterms, which after all are not that far away.
But here's the problem, if you don't mind me jumping in here, here's the problem. People are feeling a lot of pressure from inflation, but they've also seen their house prices start to decline. And it doesn't matter if a house price declines 5% or 10%, it's still declining. And the perception of wealth that people feel when their house price continues to rise is dramatic. And so by lowering interest rates, you get that feel-good part back into people's lives where they feel like they don't have to save as much for retirement because they're going to sell their house in retirement, those sorts of things, right? Right now, you feel pressure. You go to a restaurant and it's, I do a podcast on Friday and my co-host and I were talking about the $40 hamburger. You got to get a hamburger, fries, and a beer, and you spend $40 in the US.
Yeah, absolutely.
That's like twice. That's more than twice what you'd have spent in 2019. So all this started in 2020.
And then tips have started 20% as well.
Yeah,
so
exactly.
At a restaurant the other day, the tip was like a meal in Hong Kong.
Right, exactly. So we have to have reflation of the housing market to help consumption in the US, because yes, stocks are broadly owned, but still it's a relatively small number of people who are doing extremely well in stocks. So you have to have some house price inflation for those wealth effects going into the midterms.
Tony, you could take the words United States out of there and replace it quite easily with China, because what you're describing is China as well, isn't it? And we had data yesterday from China, the monthly data dump. Retail sales fell 0.6% last month. That's the first drop since the COVID lockdowns in 2022. And the decline in home prices deepened. Also, fixed asset investment shrank by more than expected, by 4.1%. On the bright side, industrial production climbed 4.5%, and it's all held together by Chinese exports, which surged nearly 20% in dollar terms last month. I mean, Richard, is the Chinese economy stagnating?
Well, I think it's good in parts, and I think, apparently the fall in consumer purchases is, they say it's explained by people are buying fewer larger goods, and that makes some sense. Post COVID, people may be looking at a car, they've been looking at bigger goods, putting new household goods in their home, and okay, you can understand that may slow down a bit, and one piece of data isn't necessarily an indication of what's happening in the future. But I think we've said for a long time that the consumer in China is not strong, not as strong as we would like, but there are certain areas that are pretty strong. If we're talking about robotics and these kind of things that are really the industries of the future, they're pretty strong. The EV market has been highly competitive, but there's a lot of exporting still. And I think the exporting thing is kind of interesting because, wandering in and out of main tourist shops, going in and seeing nice pictures of lighthouses and things like that, you look on the back and they all say made in China. So the problem is, even if you've got tariffs, if something was $1.70 and you go into a gift shop and it's $6, tariffs aren't really going to make an awful lot of difference to that.
I mean, Tony, here's the problem. The property sector, once again, new home prices down 0.2% on the month. I think, excuse me, I think this is almost the fifth year of declines.
Yeah, and I think the problem is the central government spent, I think, 7 trillion yuan on supporting that market. So by giving it to banks to support property developers and other things. So that's about $1 trillion US, 1.03 or something like that. So there's a lot of money going in to keep the status quo. And I'm not saying that as being critical. It's just, it's a big economy. And so you have to spend big dollars to keep things going, right? And so, I think the problem remains with those local and, say, provincial level banks. That's where the fragility is. It has been for 10, 15 years, and it remains that. And so until you fix that local transmission mechanism, I think you're going to have difficulty in the lower tier cities. I remember in 2009, I was sitting in Shanghai. This is, a long time ago now, but global financial crisis was going on. And I was sitting with somebody from the Wall Street Journal, and we were sitting at a table getting a coffee. And he said, "Look around you." He said, "Does it feel like there's a global recession on?" And I said, "Absolutely not. It's great here," right? This was China in 2009 in the big cities. And so, you have parts of China that will be insulated and continue to be insulated from this. But a lot of the second and third tier cities are really feeling it. Just like in the States, as Richard pointed out, a lot of people are feeling, and I'm not just talking about lower or middle income people. You have mid-high income people who are really feeling the pinch of inflation and the stagnant nature of the US economy right now. So it doesn't matter how much Xi Jinping talks up China. It doesn't matter how much Donald Trump talks up the US. It's difficult on both sides.
Richard, this is the classic K-shaped economy, isn't it? That economists talk about, sort of two-tier economy. But what does Beijing do about this? Because households are quite sort of cash rich, aren't they? They're quite solvent. They've got a lot of savings in the bank. But this is really a traditional liquidity trap. People just don't want to spend at the moment because their expectations about the future are not sort of great. So it's very difficult to deal with, isn't it? Rate cuts don't really work in that type of scenario.
Yeah, it's the old issue of pushing on a string. You can cut rates, but are investors really going to buy it and say, "Oh, well, I need to borrow more money," especially if they've got cash in the bank? So I think it is difficult. We're in a situation where owners of capital are doing extremely well. Investment bankers are laughing because they've got massive deals going through. SpaceX, for instance, we've had all of the money raising unspeakable sums of money for AI and AI development. And you do wonder when all of this is going to come back and whether we're building real issues for the future. So it is difficult for policymakers. In terms of China, I think the policymakers have decided just to wait it out. And let's see how it goes. Let's see if we can put a bit of liquidity back into the regional banks, put a bit of liquidity back into the property companies. Let's make it so that they don't actually go over the edge, and maybe they'll be able to work their way through this crisis. Meanwhile, I think they're quite happy to let America shake itself to bits with various policy issues that were misguided, such as how to fight the Iran war. So I think theirs is a wait and see and just let it go slowly strategy, not do too much. The US, I think, the liquidity floating around the market is enormous. You can't stick it all into data centers immediately. So some of it's going to end up in the stock market. And that's why I think we're seeing all-time highs broken almost daily.
Well, Tony, let me give you the final word to you on that. I mean, first of all, the liquidity that's going into the market. We've got SpaceX now, a company that makes no money, the fifth largest company in the world. It overtook Amazon today. Stock's up after the IPO 50% in just 3 sort of trading days. The B word, bubble, does come to mind, doesn't it?
Peter, they make rockets. I'm kidding. I mean, look, they can go down a lot of different paths. I saw an interview with the CEO last week. I don't think Musk is the CEO. I can't remember her name.
No.
And she was talking about how they'll have mobile phone service soon. I had no idea they were doing these types of things. So, if they go into lines like that, it could be really interesting. I think, I don't know. But yeah, you're right. I mean, their valuation is incredibly stretched based on the revenues they have, and I think there are just so many things that Americans or investors generally are kind of worried about. NVIDIA, the OpenAI IPO, the Anthropic IPO, all these things. They're kind of tired stories now, and we can be excited about AI, but for most people, how has it changed your life? You can watch a rocket go up in the air on television and you're like, there's something tangible. Oh, they're going to go to Mars. Oh, they just went around the moon. Oh, this stuff happens. But AI is just something on screen. Now, I say this running an AI company, right? But to most people, it's just something that happens in a computer. It's not really that tangible to them. So I think the AI investments on their own are a bit far off. And that's why I think SpaceX is so interesting to people, because it's tangible. It's something you can see. It's something that, and people are really in need of a vision like Musk has. Whether people agree with Musk politically or not, he's a polarizing figure, but people want a vision and they want something positive. And for the most part, I think that's what people are buying into when they buy the IPO. I don't know that they're buying the investment thesis.
They're buying the dream. Very interesting observation.
Very dangerous.
Yes, we've seen that before. Well, look, sadly, we've run out of time. Thank you both very much. You heard there Tony Nash, who is the founder of Complete Intelligence, and Richard Harris, Chief Executive Officer at Port Shelter Investment Management. It's time now on this Wednesday morning for our regular view from Japan. I'm joined today by Tokyo-based journalist and author William Pesek. Morning, William.
Good morning, Peter.
Now, the Bank of Japan increased its main interest rate to a 31-year high, although that is just 1% from 0.75%. That's the highest level since 1995, pretty much in line with market expectations. But what about the markets, particularly the currency markets? Currency traders watching very closely this decision and implications for the yen. Did the FX traders hear what they wanted to hear?
Well, they certainly heard what they expected to hear. I think, the Bank of Japan has been arguably the most predictable major central bank in the world for a couple of decades now, and this week is no exception. But what I found fascinating is that, after the BOJ raised rates to a 30-year high, as you mentioned, the Nikkei didn't fall; it rose to a record, above 70,000, and the yen did not react very much. And I think that's partly because no one's completely clear about where the BOJ is going at this point, right? And think the global economy is in flux. And a lot of this is contingent upon whether or not Donald Trump's claims to have some kind of deal framework with Iran turns out to be true. And so I think the BOJ is in a holding pattern. This meeting was interesting too, because Governor Ueda was not there. Governor Ueda is actually in the hospital with a liver infection. And so you had Deputy Governor Uchida, who took over. But I think that expectations in the markets were as such that the BOJ was able to raise interest rates, and they did so without the government screaming too much. But I think the question is, where to now? And I'm not even sure the BOJ has any sense of that, the answer to that right now.
Presumably, if the yen is going to move substantially and rebound, we need to see more from the BOJ in terms of further rate hikes in the future, or at least indications that this is not over and they're still on a tightening bias.
Exactly. And I think the drama increased a little bit yesterday because the BOJ, their forward guidance was through bond purchases, right? The BOJ basically said it's going to maintain its bond purchases at current levels heading forward. And that means that the efforts to quantitatively tighten or taper bond purchases, that's on hold for now. So in many ways, that means that the BOJ will not be stepping out of the markets. The BOJ owns more than half the bond market. It's the largest holder of Japanese stocks through exchange-traded funds. The BOJ is not going to be increasing tapering or quantitative tightening issues for now. So that's on hold. So you can argue that the BOJ did raise interest rates, but it arguably will be maintaining steady to looser monetary policy over the next year because it's worried about the global scene.
Is the Bank of Japan behind the curve? Because if you look at the data, consumer price pressures are intensifying, aren't they? Producer price inflation also is accelerating as well. And you've certainly signs that companies now are much better able than in the past to pass on these rising costs onto consumers. So does this mean the BOJ really needs to step up the pace here?
It is, but I think we forget that the BOJ really is a captured institution, right? The BOJ was technically made independent in about 1998, but no central bank would ever cut rates to zero in 1999 as it did, and effectively leave them there for 27 years. And so the government fully expects the BOJ to maintain low rates. It wants the yen to be weak, and the BOJ has never really shown the courage to take on the government and say, no, we're going to do our own thing. So the BOJ certainly is behind the curve. And I think that another element that we should be talking about is wages. Now, you mentioned that companies are in a better shape to pass prices along. Companies are also under the most pressure in decades to increase wages. And every year you have these wage negotiations between the unions and companies. This year's Shunto round resulted in a more than 5% wage increase. And the problem with that is that also could be inflationary, right? I mean, Japan has some of the lowest productivity in the OECD. When you start increasing wages by 5% a year, it's great for workers, but that could be inflationary if the government isn't taking steps to increase productivity. So you have Japan importing more inflation on a weekend. You have companies under pressure to raise wages, productivity at a standstill. Maybe AI can bridge the gap, but I'm not sure that can happen fast enough. And so really, something I always say to you when we're talking is, the next 6 months or so will be very interesting in terms of where the economy ends up and what the BOJ does about it.
Are households and consumers angry? As you say, they're getting these wage increases now, finally, 5% or more, except it's being wiped out by inflation, all the benefits of that.
Yes, I mean, real wages in Japan actually fell in 2025, and that was the fourth year of real wages falling in Japan. And the wage increases that we're seeing at the moment are facing a stagflationary outlook. I mean, Japan at the moment does have stagflation, right? The economy is likely to grow about 1.5% this year at best, while inflation officially is running 1.4%, but the BOJ has its own gauge, which is running 2.8% because it strips out government subsidies to reduce oil prices. And so you think about Japan having inflation near 3% with the economy in many ways flatlining. And it's not the perfect opportunity or the perfect environment for consumers to be increasing spending. And so you do see a domestic spending flatlining. And, again, Japan is in an interesting situation because it imports about 95% of its oil through the Strait of Hormuz. So if any leader at the G7 in France this week was trying to pull Trump aside and say, "Hey, is this peace deal for real?" It's Prime Minister Takaichi, whose prospects really rely on the U.S. and Iran wrapping this up pretty quickly.
Mm. Well, look, while we're on the topic of central banks, lots of them meeting this week, including the Fed. We will get their decision in the early hours of tomorrow morning, Hong Kong time. What can we expect? This is Kevin Walsh's first meeting as Fed chairman. What should we be looking out for?
Well, I think of Kevin Warsh as the central bank governor. He's kind of the dog who caught the car, right? Finally, he has the job he's been vying for years. And he knows what his instructions are from boss Trump, cut interest rates immediately. But Kevin Warsh is stepping into a very difficult scenario where there will be a lot of pushback on the FOMC if he tried to raise interest rates, rather cut interest rates. And so the Fed certainly seems to be pivoting towards their next move being a rate hike. And that will not sit well with Donald Trump. It'll be interesting to see how Trump takes to his social media platforms and begins bashing Kevin Warsh. How long will it be before Trump's new Fed pick will be an idiot in his vernacular online? And you still have Jerome Powell, Trump's sort of nemesis on the Fed, maintaining the seat on the board, having a voice in the room. And so for Kevin Warsh, this is, sort of the best of times, worst of times, right? He finally has the job he wanted, but he's stepping into a somewhat impossible situation. And before you know it, people will start talking about the elections coming up and how the Fed should not be making big decisions and, within the window of the election, the midterm election coming up. And so for Kevin Warsh, I really don't envy his thought process at this point.
So how does he deal with this? If his colleagues on the FOMC vote for a rate hike, what does he do? Does he go along with it to try and maintain unity, or does he oppose it and vote for a rate cut and try somehow to say the data justifies it? What does he do? Or does he go to Donald Trump and say, look, at the moment, it's just simply impossible to cut rates?
I think it's more the latter. I'm trying to think, I should have probably Googled this before we spoke, but I'm trying to think of a scenario where a Federal Reserve chairman dissented against the decision that the broader board is going to make. The question is, will we see that? Will Kevin Warsh feel comfortable voting to maintain rates and also voting to support a tightening bias, knowing that Donald Trump will call him a minute later? So it's somewhat of an impossible situation. But, when you look at the economic data in the U.S., when you look at the fact that, I was wrong about the U.S. 6 months ago, I thought the U.S. was certainly heading into a recession, given the tariffs, given the rise in oil prices from the war in Iran. I really did think the U.S. was deeply vulnerable. And the employment situation in the U.S. is holding up month after month in ways I never expected. Inflation in the U.S. is running 4.2%. So there's really no economic argument for cutting rates at this point. The best scenario for Warsh, I guess, is keeping them unchanged until further.
It's unlikely, isn't it, that we're going to be in the situation tomorrow where the majority votes for an increase and Kevin Walsh has to object to it. But what could happen is that rates are left on hold. That's the most likely outcome. But the bias changes because there are already members of the FOMC who said they don't agree with the easing bias. So that could easily be taken away over Kevin Walsh's objections and maybe even replaced with a tightening bias.
Well, there's also the bond market. I think one of the problems that Warsh might have is if he says, well, we're going to, basically leave rates unchanged until further notice. Will the so-called bond vigilantes step up and begin bidding up long-term rates on their own? Japan faces the same problem, right? That when the BOJ says we're not going to taper over the next year at an increasing rate, the bond vigilantes might take over. And if the U.S. faces a scenario where bond traders are defying the Fed and bidding rates higher, that's probably a worse scenario than the Federal Reserve maintaining control and being in the driver's seat. And that's another dilemma for Warsh, right? You have Trump looking over his shoulder, but you have the bond market looking over the other shoulder. And which force is more dominant in Warsh's mind? And that's another wild card for the next few months.
Well, another wild card, of course, is this so-called peace agreement that Donald Trump says he has already signed electronically with Iran to try and end the war. The problem is he won't tell us what's in it. No one seems to know right now what exactly he has agreed to, although there are details starting to leak out now. It certainly seems that he hasn't got the Iranian capitulation that he was demanding a few weeks ago, has he?
Well, I think when you ask that question, the words "so-called" do a lot of work, right? I mean, I think Trump is trying to sell this so-called truce arrangement, peace deal, whatever you want to call it. He's trying to sell it to the G7, and you can see that leaders are to some extent rolling their eyes. There's a really great clip of Trump meeting with Emmanuel Macron of France, and Macron was clearly trying not to laugh when Trump was talking about this incredible deal with Iran. But yeah, I mean, this, count the ways this can unravel, and unless Israel is on board, and Israel is promising not to push further into Lebanon, this is a wash. And I think in many ways, Iran, they've won on so many levels. One of the levels in which they've won is if this document that Trump signs is only a couple of pages, the wiggle room for Iran to say, well, this arrangement's been violated, we're going to cut, close the Strait of Hormuz again. This is going to be a daily risk for markets. And so I'm kind of amazed that markets at this point are giving Trump the benefit of the doubt. Maybe they're not as much as they would have 6 months ago, but this so-called arrangement between the U.S. and Iran, this MOU, if you will, seems to be dead in arrival, doesn't it?
And it also seems to be very expensive as well. The talk is of a $300 billion reconstruction fund. Well, that's way, way more than what Obama agreed to pay with them, which Donald Trump criticized that agreement that Obama made a few years ago.
Right. And the difference is what Obama did was he unfreezed assets that actually belong to the Iranians. What Trump is talking about is a kind of Marshall Plan, if you will, for Iran that's going to have to be financed. And I'm assuming the U.S. is going to pay 99% of it. Sure, it will be paid through the Gulf so that Trump can claim this is not coming from the U.S. But this is money that Iran is going to expect and they're going to demand. And $300 billion can rebuild a lot of military infrastructure. It can buy a lot of bombs, a lot of drones, a lot of naval vessels, and it can do a lot to basically rearm Iran's proxies around the world. And so, if you're Barack Obama or any of the people who were part of the Obama administration, like, say, Ben Rhodes, I'm actually reading Ben Rhodes' book right now, you have to wonder what in the world Trump is thinking here.
Now, he's at the G7 at the moment, trying to convince G7 allies that he's got a good deal here. Prime Minister Takaichi is also there as well. What is her position? Is this an opportunity for her to sort of show a leadership role at the G7?
Well, I think she's trying to do that to some extent, but I think her problem is every time she gets in the room with Trump, he's trying to basically get her to commit Japanese military assets, even troops, to go to the Middle East, which is something that she does not want to do. I think the appetite among the Japanese population is to not get involved in this Middle East quagmire in any way. And certainly, constitutionally, she's barred as well. But I think I get the impression that every time Takaichi sits down with Trump, she's doing her best to run out the clock and avoid being pressured to send more troops to Japan, to the Middle East. But, Japan's in a very difficult situation at the moment, given the fact that, as I mentioned before, it imports about more than 95% of its oil through the Strait of Hormuz. Fertilizer prices are rising. The costs of metals are rising. And so Japan is importing more and more inflation. And when Japan thinks about the next 6 months and where the economy is heading, a lot of it relies on Trump actually bringing this conflict to an end. And I think that in many ways, Japan's economy and her political prospects, if you will, are very much in flux because she has tied herself to the Trump administration pretty publicly, right? She's been very, very, very nice to Trump, even dancing at the White House, which didn't go down very well here in Japan. So, she's got. I think Takaichi has more writing on Trump succeeding in the Persian Gulf than most most G7 leaders, I'd argue.
You imagine that maybe she could be a bit of a bridge between the US and Europe, couldn't she? Because she does seem to get on reasonably well with him. He seems to like her, unlike his European allies, which he doesn't seem to like at all.
She could be, but then again, her whole plank is isolationist. Basically, Takaichi has never been known to be much of a diplomat, right? And, she hasn't really said the words very much, Japan first, but her mentor was Shinzo Abe. And basically, Shinzo Abe was the Japan first leader. And that's, in many ways, her worldview. And, when Trump says, make America great, arguably that was Abe's phrase, make Japan great, years ago. And Steve Bannon once called Abe Trump before Trump. And Takaichi comes from that fold, if you will. And so it would be interesting to see Japan playing this role. But I'm not sure that she has the confidence on the world stage to do that. I'd like to be wrong about that. I would love to be proven wrong about that, but I haven't seen any indication that she has any interest in doing that.
That's William Pesek, Tokyo-based journalist and author.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you for listening to Money Talk this morning. Do please take a look at my newsletter. That's at peterlewismoneytalk.substack.com. I'll be back tomorrow with the final Money Talk of the week when I'll be joined by Andrew Sullivan, the founder of Asian Market Sense, and Alex Fu McMillan, a freelance writer and Asia columnist for TheStreet.com. And providing a view from mainland China is Hao Hong, managing partner and CIO at Lotus Asset Management. Have a good day.
Money Talk.